To our floor show, traders, that's a good sign, is it not? And as we look at what's going on with the markets, they've been really interested in moving on two things, earnings and, of course, the trade battle. But let me get to you first, Sarge. Give me a sense of what might happen if we have resolution on at least one or both sides here.
All right, there's a lot that we've been pricing in. We've been pricing in an easier tone from the Fed, for one, since December. But Brexit is still part of the ball game. The shutdown, the trade war, they're all very important, and they've all depressed markets to a point where we do have the possibility of something of an upside spring here. In the meantime, you got to take what you can get. You just brought up the semiconductors about a minute ago. Now, to me, this is obviously something of a hedge fund squeeze that we're seeing here towards the higher prices anyway. So when a Lam Research takes off like that, I wanted to buy a Lam, I missed it. But you know what I did instead? I took profits in some of my other names because you got to take what the market gives you. And I set up Intel for tonight. I'm long Intel. I have a lot of derivative plays in the name, but basically I'm set up for a rise in the share price.
All right.
That's where I am.
Okay. Scott Bauer, what about you? I mean, obviously, Sarge is looking specifically at individual names and how they're performing. It's hard, though, to eliminate or dissipate some of the overhang of the headline risk coming out of D.C.
Well, especially when you hear two different things on the same subject. Earlier this morning, Wilbur Ross came out and said, we're not anywhere close to making some strides or making a deal here. And then the words out of, Chair Stephen Mnuchin says we're
Total
making
opposite.
great strides. So 4 hours apart, 5 hours apart, we're getting opposite ends. That is the overhang in the market right now, and that is what's really inhibiting players in the marketplace from really getting involved here, because you break it down, like Sarge was just saying, you break it down to a specific sector or even some specific stocks, you can make plays, but there's still this massive overhang. And it's not just the trade deal. It's like Sarge said, it's Brexit. There's so many other things going on. You've got geopolitical risk now with Venezuela in the oil space. So we still have all of these massive overhangs.
Yeah, but let me get back to Sarge. Scott just said it distracts people, but should it? Should they be piling in on great names that are discounted right now?
Let me help the home gamers with this, all right? If you want to get aggressive, you can do that, but you have to maintain high cash levels. This mitigates the possibility of error. I'm at 43% cash right now. Have you ever heard a stock jockey say that? I'm at 18% bonds. I'm at 7.5% gold. What does that leave, like 39% for equities? But I'm aggressive as heck on those equities. I think that you have to almost play it as if you're talking two different games, because on one end, you're making sure you don't lose your shirt. But on the other hand, you're going for the gusto a little bit. You may underperform, but you'll underperform to the downside, too.
Yeah, I hear you. I hear you. We've got the 10-year yield still around 2.7%. We're watching all of it. Stephen, Scott, thank you both so very much. 50 points.
Thanks.
Actually, 50 minutes. 50 minutes before the closing bell rings. And we do have big